Hey, what's going on everybody? Leo Invest here, back with yet again another educational video. This video is going to be a recap of some NASDAQ shorts that I took on Wednesday, May 14th, 2025. And the reason why I think this is an important recap for us to go through is because, as many of us know from Wednesday's market, we had quite the aggressive chop fest, right? A lot of people got their evals or their express accounts burnt, or their personal accounts took some pretty big hits on Wednesday after that CPI data release, which caused market to create this incredible consolidation period prior to having a decent aggressive short position that had formed on NASDAQ by utilizing the T-Trades Fractal Model. So let's get right into it, right? And we're going to start off by analyzing the hourly time frame, which helped me depict a bias prior to entering these short positions on NASDAQ on the 5-minute time frame. And jumping right to it here, what do we notice about NASDAQ on the hourly time frame? Well, there's a couple different things to note. First of all, we see this 9 o'clock candle. It formed a pretty disgusting hourly. If we just look at this closure, we had a very indecisive bullish closure with a very large bearish wick as well as a bullish wick. And when you see a candlestick close with a small body and even bullish and bearish wicks, you can assume this as in a consolidation period, because if you think about it, the movement had an aggressive high and an aggressive low, but market was not decisive enough to choose a direction in which to close. Following that, we saw a 10 o'clock and an 11 o'clock bullish run with some pretty aggressive bearish movement. So we could basically depict market to be this incredible consolidation period, sort of depicting it like this red line that I have showcased on my screen, right? We had these aggressive highs, but followed by that consolidation, aggressive low, followed by that consolidation, which doesn't really validate any position and just showcases a high period of consolidation. So what did I notice that finally gave me interest into these NASDAQ shorts by utilizing the T-Trades Fractal Model? Well, there's a couple different things to note. First of all here, what did we see happen on the hourly time frame between NASDAQ and ES? And as many of us know, there's a couple different things I like to look at. The first being I like to see that some type of liquidity, so a previous session high or low, has been swept, as well as a previous higher time frame high or low that has been swept, paired with some type of SMT with a correlating asset. And in this example, NASDAQ actually did just that, where we saw this previous high get swept, we saw this 9 o'clock high get swept, as well as we saw this 11 o'clock high get swept on NASDAQ, paired with an SMT in correlation with ES. And so when I saw these first two layers of confluence and I saw us break this original 9 o'clock high and this 11 o'clock high, the next thing I want to look for is to see some type of reversal signature form in order to identify a potential short setup within NASDAQ for this trade. And so here, once again, to reiterate, we saw liquidity get swept at that 9 o'clock and that 11 o'clock high with this 12 o'clock candle. And we saw an SMT form, an SMT divergence form between NASDAQ and ES on this time frame. And so here was my first two layers of confluence that finally gave me confidence to potentially give me a bearish bias outside of this consolidation nightmare that we had on that Wednesday 9 o'clock until 11 o'clock move. And so that sort of depicts the hourly time frame for me. But let's actually break down the entry model that came into this NASDAQ short position. And so I'm going to open up the 5-minute time frame to better yet understand, or help you all understand, kind of where my thought process was with this trade. And so there's a couple different things to note right off this bat. Well, let's just mark where we see liquidity. And first of all, as I've mentioned before, I like to mark these previous highs where we have high interest liquidity. So this 9 o'clock aggressive high, when we had these indices open at 9:30, we had an aggressive bullish movement, which was about an 80-point move followed by a 3 candle body down closure. This created a high, which ended up having a lot of liquidity in orders that had not been quite filled yet at those highs yet. So what was I waiting to see? Well, I wanted to see two things. I either wanted to see a sweep of the liquidity at the lows, which is what we saw here, paired with some reversal signature and a continuation into these highs, which I didn't end up really liking because of this aggressive consolidation. And so I sat back in the saddle and waited for a setup to form by retesting this high and then giving me some type of reversal signature on the sweep of this high. And so, as I mentioned here, we saw SMT with ES form on this time frame, which gave me some confluence, as well as we also swept that previous 9 o'clock high, as well as this 11 o'clock candle high, which was formed right at around 21,388.50. So those were my first two layers of confluence here. And just to mark up the chart a little bit, because I think it's important to depict where liquidity lies, there's a couple different things to note. And the first one being here, well, what do we notice about this specific period in market? Well, we had a couple rejections off of this demand zone that had formed on this 5-minute time frame too, right? When we look at this, market pulled into this zone, we rejected, we retested, rejected, retested aggressively once again, and had a bearish closure rejection once again above that demand. And so here gave me a strong area of liquidity and potential buyer interest, where a lot of these buy orders were waiting to be filled when price retraced into these buy zones, or this demand zone in this example. And so although I did not take any trade off of this, when I saw this second rejection off of this 1105 bullish closure, I was anticipating that market was once again going to sweep those previous highs, or potentially retest that New York high that was formed at that 935 candle. And so here, what did we see? Market rejected off of this demand. We had a bullish closure confirmation and a continuation higher into retracement, continuation, retracement, continuation, where we broke above the high and formed an SMT with ES. Now, those were my first two big indicators for a potential short setup here. But what else did I notice that gave me this confidence on this trade to be like, hey, this is a potential high value setup into shorts? And it's gonna have to do with a nice little thing called a breaker block. And here with this bearish candle, we actually had a bearish breaker block that had formed on the 5-minute time frame. So I'm gonna mark this out just to make it easy for us all to follow here. And here we'll put breaker block and make this a red bearish breaker block. And so here, what I was wanting to see now was a couple different things. Well, we saw this breaker block form, and so one area for potential entry could be a closure below this bearish breaker block. But also, when we utilize the fractal model, what do we typically like to look for? Well, we like to look for a change in state of delivery. And a change in state of delivery can typically be formed when you see a sweep of a previous high or a previous candle high on a higher time frame, which then pairs with a lower time frame change in state of delivery. And so here from this 935 high, what did we see happen at 1230? Well, we swept that previous high, but how did we sweep this previous high? We swept this previous high with a 3 candle body up closure. And so right here, we have our bearish change in state of delivery, which I will mark in this red line here. So now, I was basing this trade off of a couple different layers of confluence. SMT at the highs, a session liquidity sweep, a sweep off that 9 o'clock, as well as this 11 o'clock high, SMT with ES, this bearish breaker block, and now this change in state of delivery. So how can I actually validate a short setup to potentially enter this short position in NASDAQ, which I ended up doing? Well, once again, you never want to enter a trade off of anticipation of a move, but rather you want to see the move occur and a closure below the breaker and this change in state of delivery. And for me, I was looking to see a closure, candle body closure, below this change in state of delivery in order to validate a short position back into this demand zone at these lows here. And so if you had just entered with anticipation, there's always the chance that market just decides to reject off of the encroachment or the 50% level of that breaker block and continue back to these highs to potentially fill that SMT with ES or just continue to newer highs. So I wanted to wait for a candle body closure of this change in state of delivery and potentially even this breaker block to identify a short setup on NASDAQ. So I'm just going to let that play out, and the screen is just lagging a little bit here, so I apologize in advance here. But what do we notice with this trade setup? And I'm going to exit the replay tool here just because it looks like it doesn't want to work right now, but let's just look at that short setup on Wednesday anyways. So what did we see happen with NASDAQ here? Well, there's a couple different things. What happened was we saw that we had a closure below this change in state of delivery, marked in this red line here, which validated this short position. But for some people that saw this breaker block, you might not be comfortable in entering this trade yet because there's always the chance that we reject off of this breaker and retest those highs once again. But for me, when I utilize the fractal model paired with SMT and a sweep of a previous candle body high or a candle high, which is what we saw here, most of the time this validates my short entry into these NASDAQ shorts. And so here upon this 5-minute closure, I entered this short position with my stop at that change in state of delivery candle body high, which is marked out here at 21,412. And then, as we know, I typically like to target a 2-to-1 risk to reward ratio, which will be marked out right here, right? And so when we look at this trade setup, what did we see happen? Well, we are risking 43 points on NASDAQ for the chance to make 86 points for this 2-to-1 R, which ended up playing out beautifully in our favor. But let's now say you weren't interested in taking a 43-point stop because a lot of you newer traders out there might not be comfortable with risking this many points. Well, that's where this breaker block becomes a very useful layer of confluence because it allows you to mitigate and manage your risk by lowering your stop by using the top or bottom of a breaker block depending on the side you are playing. So in an opposing example, let's say you didn't want to put your stop at the top of that change in state of delivery. Well, you could actually put it on the closure of this change in state or this breaker block and just put your stop, a point or two above this breaker block, because now if market decided that it wanted to have a closure back above this breaker, what can we anticipate with market? Well, we can actually anticipate that market is going to break above, retest that breaker, and continue to those previous highs, which is always a potential thing. So this could have managed your risk by only risking 19 stops instead of 43, and then you could have just targeted a simple 2-to-1 risk to reward ratio by risking 19 points to make 38 points on this trade. Or if you saw, which is what I had pointed out with my original entry here on the short position, why was this trade such a valid position and why did it work out so well for me? Well, as you can see with that 43-point stop targeting that 2-to-1 risk to reward, I closed out this trade at a perfect 2-to-1. And the reason being as well is, what did we have once we saw this reversal signature form? Well, we had a high interest area of liquidity, which was formed at this demand zone on the 5-minute, where we saw these previous few rejections form on NASDAQ. And so once this reversal signature printed, as well as this SMT and a previous high sweep with ES, we can anticipate now that market is going to pull into these buy orders at this liquidity within this demand zone. And so here, whether you wanted to exit right at this demand zone or below, this is a completely valid position and one that yields a very good percentage profit, because where are we seeing? We are not blindly trading. We know where the liquidity lies and we can depict where market wants to go next based on identifying where liquidity lies and where those orders might potentially be. So just to reiterate once again, what did we see happen? Well, we saw SMT form on the hourly between NASDAQ and ES. We also saw a sweep of a previous candle body high on the hourly time frame. So we saw this 12 o'clock sweep this 11 o'clock as well as this 9 o'clock high and form a bearish change in state of delivery. And once we saw a closure below this SIST as well as a closure below this breaker block, that gave us the entry model to target a 2-to-1 risk to reward, yielding a beautiful 2R on this trade while only risking 43 points. And once again, for those of you that didn't want to risk as much, you can always utilize that breaker block high as a potential stop period in order to manage less risk within a position. And so here, this played out for a beautiful 2R. We identified where the liquidity lies and where we could see market going. And then that is exactly what ended up happening. So I'm just gonna remove the replay tool now so you guys can better see what the market ends up doing. Right? As we see here with this breaker, we end up going and then market ended up having another rejection back above. So I'm going to exit the replay and we're going to go back here just so you can see what happens once we hit this high interest area of liquidity. And as you can see here, we hit this 2R on this trade, and after we hit that 2R, what happened with market? Well, we hit this demand zone where these buy orders were sitting and we rejected back above and had a continuation back into these highs. So this, in my eyes, is what I consider to be a perfect A+ setup by utilizing the fractal model as well as the breaker block, which uses a subsection of the unicorn model as well. And in my eyes, this was a beautiful trade and I would take this 10 out of 10 times. Once again, these trades do not have a 100% win rate, but when a setup forms, it is important to trust your model and enter, right? You cannot always depict 100% where market is going to go, but layers of confluence can help you identify those trades and take trade setups of high caliber like this one. But if you guys did enjoy this video, please feel free to subscribe and like for more content like this, and I will catch you all on my YouTube live streams. You all have a great rest of your day. I'll see you. Bye now.